Good evening to our clients and partners worldwide. My name is Cameron Tufail. I am the Associate Director for Intermark Global, particularly for the UK division. I'd like to introduce you to Stephen Oladipo, who is a colleague of mine and one of our senior investment consultants. Today, we will be taking you through the UK property investment opportunities with Intermark Global for 2025. Right. So, just a bit about Intermark Global. We were founded in 1993, which brings us to our 32nd year. And for 15 years, we were associated and partnered with Savills. We offer a wide range of services, including property transactions worldwide, investment, and immigration consulting for individuals, as well as consulting for developers and preparation of analytic reports. We have 8 regional offices and 700 partners plus worldwide. Our regional offices include the UAE, Thailand, which is an extremely popular investment choice for many at the moment, Turkey, Cyprus, Indonesia, the United Kingdom, and more recently, we have just expanded into China. Our real estate key areas of expertise, we specialize in real estate investments from apartments and villas for rental purposes, high percentage returns on on as yields for investment, as well as capital growth focused as well. We do provide immigration services, so citizenship of Turkey, Vanuatu, and Egypt, European Union, Middle East, and Turkish resident permits for investment, as well as others, including the US green card and Canadian permanent residence. And finally, what we also specialize in is lifestyle real estate. So that would mean more so of somebody looking for a home for themselves, or somebody in a case where what we see a lot of actually is people looking to travel to London who fly frequently during the summers and have a holiday home for themselves. I'll
Thank
pass
you
you
very
over.
much. Thank you very much, Cameron. So in terms of our real estate areas, key areas, the UK being our core competency in terms of kind of what we look at and how we help our clients. But as Cameron has mentioned earlier, we do help clients around the world in terms of investment. You'll see along the bottom here in terms of the entry rates of most countries. First and foremost, if we look at Thailand, as Cameron mentioned earlier, it is one of our better projects and better performing projects. And I would say that more than anything, because of the entry rate, you're looking at 70,000 USD as an entry rate, with your returns being anywhere between 5 and 10%. And if I'm being very honest, I think that's more on the conservative side. If we now move to the UK, we see it being roughly at the 180,000 mark. In terms of that 180,000, which differs a bit from Thailand. Thailand would be a cash purchase, whereas the UK, you could actually purchase via a mortgage. So in terms of that 180K, and we'll go on to this more as we go through the webinar today, you don't have to pay that full 180K. The UK, you can put down a deposit as a buy-to-let investor of 25% and mortgage the rest. And like I said, we'll go into that a bit more. We do cover a lot more regions, the UAE being another large performer, Bali, Qatar, etc. But what we're going to do today is focus on the UK. So if you did have any interest in any other of those locations, please do let us know. We're more than happy to put you in contact with one of the right people in our team.
Excellent. Thanks for that, Stephen. Right. So moving on to investments in the UK, the locations for investment. Transparently, we cover all regions around the UK. We have over 60 projects within London. Most recently, we've seen that the most popular areas do seem to be the north of the UK, areas such as Manchester, Liverpool, and Birmingham. Reason being is similar to investing into London maybe 15 to 20 years ago. So they see a lot more higher returns. Of course, the price point is a lot less, and the growth seems to be there as well. So 9.9% GBP to USD over the past 12 months, and there's a 2.1% inflation rate in the last 12 months. Starting price in the UK, this is a good question. Actually, a lot of people do ask, and normally would think the UK is really expensive, whereas majority of the time they're mainly thinking about central London or so. However, in the UK, you could find something for as low as 180,000 GBP with a rental yield of anywhere from 3 to 7%. Now, what would actually like to show you is the market overview and forecast and why invest in the UK property market in 2025. So, why investors choose the UK? Well, the UK is one of the three largest economies in Europe. The pound, as we all know, is the fourth most popular currency in the world after the USD, European currency, and JPY. At this time, dollar investors receive a currency discount of around 50% due to how low the pound exchange rate is. High demand for property leads to consistent price growth on average between 3 and 7% a year. And I think that goes without saying, of course, on how stable the UK is, really. The track record goes back hundreds of years. And if you actually have looked at it for the last 100 years, you'll see that 99% of the time, I'd say, majority of investors have seen substantial capital growth. And that includes family members of mine, myself as an investor. And the UK really has outshone itself for stability on capital growth, and that's for sure. Finally, I'd add there's higher yields and lower starting check than anywhere in Western Europe.
Why investors are choosing the UK? And this is a main one, and Cameron touched on it there. What I always say is when people say, why do you invest in the UK or why should I invest in the UK? It's two key words, and that's stability and security. It's a very, very stable market. And as Cameron touched on earlier, if we look over the last 70 years, and this is actually a report produced by the company Savills, and it said over the last 70 years, the UK property market has grown by 364%, even inclusive of inflation. Also, as well, we have a really, really progressive tax rate. So, as an investor, depending on where you are in the world, the UK has treaties with most countries and therefore gives you a tax allowance of 12,000, sorry, £570 before you even get taxed. That then changes in terms of we're looking per annum to 36,000, which is roughly about 13%. In terms of tax advice, I know a lot of people do have questions on this. I spoke to a few of you prior to coming into this webinar. I'm more than happy to go through taxes and how it works, but it's quite detailed and quite subjective to each person's case, depending on where they are in the world. We work with, as we said earlier, 700 partners worldwide. And the best thing about that is we have expert tax advisors and accountants. Legally, we're not allowed to give tax advice, so the best thing for us to do is put you over to a tax advisor that can advise you on your subjective condition to how that will work for you. It's a very, very easy deal process. And what do we mean by that? Funds are processed and transferred through UK solicitors. So that goes back into what I was talking about earlier, about this being safe and secure. When you are buying from a developer, when you are buying a property, you do not send that money straight over to the developer. What would happen is we can recommend you a solicitor. You can choose your own. The reason why we recommend you a solicitor, essentially, they've seen the specific development that you're looking at, and therefore they're able to streamline the process. You would send your funds over to the solicitor, who then sends it over to the developer's solicitor, that then sends it over to the developer. So it makes it a very, very streamlined and safe process.
Excellent. Moving forward, the analytics, Stephen.
So in terms of the analytics, we're looking at the annual change in property prices. If we're looking at buyer demand, and this is up starting in terms of this year, we've seen a 13% increase year on year from the last 2 years. We're also seeing the number of sales pump up by 12%, the flow of new supply only up by 11%, and stock in terms of new homes, that's actually available homes on the market right now, is about 10% from last year. what we have to look at last year, and this is actually a prime time because we have actually seen the Bank of England today reduced interest rates on mortgages to 4.5%. This is a slash of 0.25%, and actually the lowest that we've seen mortgage rates for the last 2 years, actually post pandemic. So it's fantastic news for investors and fantastic news for investors looking to get into the UK. As I mentioned, where you can put in 25% and leverage that cash against the property price. So therefore, maximizing your returns. Also, as well, I spoke earlier, and this is a great point. Look at the Savills price growth, and we're looking at areas, and a lot of clients come to me, and of course they say, Stephen, I want to purchase in London. That is well known. London is one of the most well-known cities in the world. I'm born and raised in London, in an area, South London, called Battersea. It's very close to the new Battersea Power Station, or an area called Chelsea. However, in terms of investment, yes, London is still a very good investment, but what we're seeing is the entry prices in London be quite steep. So you're looking for a one bed starting anywhere in the range, and it's really dependent where you're looking in the city. I would say anything of quality is between 350 and 400k, and that even is on a lower end. For a two bed, between 450 and 500k. If you're looking purely as an investment, where would you park your cash is a lot of the questions that I seem to be fielding from my investors. And where I would be parking our cash, and where a lot of the savvy investors are, is down here. It's in the northwest of the country. Northwest being cities such as your Manchesters, your Liverpools, also in the West Midlands. So that is where the home of the second city in the UK is, Birmingham. And these types of areas are seeing this year anywhere between 4% and 5% growth. Over the next 5 years, in an area like the Northwest, we're seeing 29.4% growth. What does that mean? If you're able to park your cash in and put down 25%, your returns over that time, essentially, you're going to 2x on the cash you put in. So you're going to double your money. So fantastic level of returns in a safe and secure market.
I think that was an excellent overview, Stephen, and I completely agree with you there.
The rental market. So Zoopla, as well as Savills, as well as Rightmove, are an independent company, and they often do reports. And this is the report from December 2024, so very, very recent. Rental demand in the UK is up by 31%. And also the stock of homes is only up by 12%. So what is that saying to us? Right now in the UK, demand is vastly outstripping the supply. There was a survey done by the BBC, so the British Broadcasting Corporation, and it said for every one property in the country, there are 20 renters looking for that one property. What does that say for investors? So if you're looking at a property, you're not going to be looking at any void periods. We rarely get void periods. I put an apartment on the market in Manchester yesterday. It was snapped up today, and tomorrow we're having a tenant move in. That is how quick we are seeing properties rented. And I said 20% was the national average, or 20 renters, sorry, was the national average. In Birmingham, it's 25 renters. In Manchester, it's 30 renters. So with the demand vastly outstripping the supply, we are seeing great levels of growth in rentals and great levels of growth within capital appreciation as well.
I think one more thing I'd add to that actually is what tends to happen is we don't actually see what the leaders of the market are doing. Whereas big banks such as PwC or other large KPMG, for instance, large corporations, they are typically buying buildings, which a lot of people don't know about. In the case with, for instance, with Barclay or other major developers, and using it purely for rental purposes. So if the big boys are investing, it just shows that we should be leading, because clearly they definitely know what they're doing.
So this is rental market analysis, and the average cost in rent, and again, very, very recently. So these numbers are from December 2024. The average rent in the UK is roughly about £1,284, and that is taking into consideration the whole of the UK. So I mentioned your major cities, but we also have secondary cities such as your Sheffield, your Newcastle, or tertiary cities like Doncaster or Brighton. Arguably, Brighton might go fall into the category of a secondary market. But these rents grew from the year before by 1.3%. If we're looking in the prime cities, so your London, your Manchester, your Birmingham, your Liverpool, even, we saw rents rise nearly into double digits last year, between 8 and 12%. The average UK rent, including London, again up 3.7% from 2023. And the average monthly rent in London, it's slightly down. But again, this is what I spoke about earlier. If you're an investor, again, London's a great place to start your investment, but where you want to see the best levels of return and maximizing the money that you're putting down are cities such as Birmingham and Manchester, and that's where the savvy investors are parking their cash.
Great. So I'll go for this. The analytics for Savills, so rental rate forecast, the UK rates growth. So we're looking at 17.6 from the next 5 years, from 2025 to 2029, 14.2% on London rate growths, and the UK as a whole at 15% for the next 5 years. I believe, actually, if I am correct, I did see another Savills article which is expecting 29.9% just in Manchester alone. Another reason why it has been such a key hotspot and caught investors such as myself who recently just bought an apartment there. Top 10 best cities for landlords, Stephen.
Top 10 best city for landlords, and we're really speaking about where we were speaking before. This is a city that I didn't mention actually, and it's Bristol. Bristol is a university city in the southeast side of no, southwest side of the country, if I can get my geography right. And it's the university city that's really driving the market there. In terms of the rankings, you can see between the last couple of years, it is kind of been trading with Manchester. And then let's talk about Manchester. Manchester, a city where we're seeing 80% of the FTSE 100 companies, the 100 best companies in the UK, have a footprint. You're also seeing global leaders or very, very large conglomerates and monopolies move their headquarters to these cities. And this is where we're seeing the best levels of return. I spoke earlier about kind of the Midlands. Coventry is a city very, very close to Birmingham, which is seeing fantastic return. It jumped all their way up from 7th now to 3rd. And again, I mentioned Brighton earlier. It's a seaside city. This is a city very, very well in the market for what we call serviced accommodation. So that's Airbnb, etc. The UK has a very, very large staycation market. What do I mean by that? Staycation is essentially where you stay in the same country, but you move maybe outside the city that you're living in. I absolutely love Brighton. It's fantastic. You go down by the seaside. If you ever travel, you got to try the donuts there. They're absolutely amazing. Maybe that's why so many people are going down there. And we've seen a jump on the list from 10th to 4th. London comes in at 5th, down from 3, but still good levels of return. And these are other cities across the country that are performing really well. But those are the top 5.
So how to choose a suitable development? It really goes down to what budget you have. And a lot of the clients, for instance, we deal with, what we like to do is more so kind of initiate the sense of, for instance, being a tailor. So not tailoring necessarily your suit, but listening to people and more so seeing exactly what prompted the inquiry, what their needs are. And essentially, we like to tailor our recommendations according to what fits the client best. So what budget do you have? Our portfolio includes properties from £180,000 upwards, all the way ranging from the £1 million plus mark, depending on where you're looking to buy. Which cities are you considering buying in? Investor favorites, as we've mentioned throughout this whole chat, have been the North, Manchester, Birmingham, Liverpool. However, the good news is we do offer other regions as well. So if you did want something particular to you, which was in Sheffield as an example, we would check with our sourcing team and have some options available for you just to make sure that they suit. Otherwise, another thing, if we can't actually find something which suits you, we will be happily enough to let you know as well, or recommend something close by which we think fits your budget. Completion date, again, something that suits you. We have properties which are completed and renting, whereas if you wanted something which was 2 or 3 years off plan with a good payment plan and a reputable developer, we have pretty much everything that you would require. Are you planning to rent out the property for a short-term let? Again, great news. We at Intermark Global, we specialize in short-term lettings for particular developments as well as long-term. Another thing I'd like to mention, which I'll probably get into later, is we are a full 360 company. So we can assist with mortgages, we can assist with renting the property out. I think the main thing for us is, of course, building a relationship with a client for future businesses, for future business.
Cameron, would you like to take this?
Sure. So, comparison of property investment in England cities. Now, typically in London, you can see all of the property ranging prices are slightly different. London obviously being at the highest. So in London, typically I'd say on the outskirts, we're looking at anywhere from 450,000 plus, whereas as you can see, Manchester, Birmingham, and Liverpool all range very similar and are pretty much all leaders of the north in their own rights. Rental yields for London. Now, bear in mind that you are paying a higher amount. So the rental yield is slightly lower, but it's being achieved on a higher amount, which kind of gives you that extra value for investing into London. Whereas Manchester, Birmingham, and Liverpool, again, all very similar with returns up to 7%. Now, believe it or not, I have many clients and friends and family who actually have property, whether it's in London or the north, and in some cases we've seen as high as rental yields being up to 10%. The 5-year price growth forecast. This is where it gets interesting, and the figure I mentioned before, 29.4% for Manchester and Liverpool. Birmingham coming right behind them with so much going on, the HS2 train, etc., at 26.4%. London, what more do we desire? It's been one of the top competitors in the world for however long, and it's still giving us that 17.1% expected in the next 5 years. Key areas, I think for me, guys, transparently, I like city centers. I also believe in outskirt areas which have the potential to grow into something. Now, when I say that, you may ask what I mean. I'll give you a perfect example, being the media city in Manchester. Birmingham, of course, I'd say the jewelry quarter, or a lot of regeneration is happening in Digbeth. Areas in London include Canary Wharf, Greenwich. A lot of popular areas seem to be, for instance, Wembley or Wimbledon. These areas seem to be very popular commutable cities at the moment. And Liverpool, of course, there's so much happening in Liverpool in regeneration wise. And again, I'd go central or by Liverpool Waters. Major companies, I think Stephen touched base on that. 100 of the FTSE 100 companies, 80% of the 100 FTSE 80% of the FTSE 100. Stephen, I'm getting confused there. 80%.
So 80% of the FTSE 100 companies are seen in Manchester, with global leaders such as your Google, your Amazon, your Microsoft. But this is kind of span across, and we kind of touched on it, and I'm happy that this slide's really evident what we spoke about earlier. London, I'm not going to speak about because I feel it sells itself. We know it's the capital city. It's been around for ages. It's a global leader. Manchester, in terms of what that is doing, it's actually the fastest growing city pound for pound in the country, 29.4%. So, like I said, if you're putting in a deposit of 25%, you're 2xing on your money in one of, if not the stablest markets in the whole world. In terms of the transport links, you're looking at a metro link. So I would argue with anyone, on a good day, I can run around Manchester city centre in under 2 hours. It's not really a big place. And we see the population here at the bottom of 2.5 million. That 2.5 million is just around what we call Manchester. But there's an area called Greater Manchester, which encompasses cities like your Prestons, your Boltons, your Stockports. In that wider area, we're seeing a population of 5.8 million, and it's only growing. And if you're looking for an investment, I always have a saying, the same saying, sorry, that we use kind of in stocks and in crypto, and it's buy the rumor, sell the news. The likeliness is, if you've heard about something a lot, people have made quite a bit of money there. What we want to do is we want to get into areas that might be a bit rough and ready, where we're looking for growth, and there's also things going on, levels of regeneration. So Manchester, for example, there was an area in Manchester called Salford Quays. It's on the south side of city centre. If you're a football fan like me, you should know it well, because that's where Manchester United, we're not doing so great this year, but that's where we're situated. And what happened there? There was an area called Salford Quays, sorry. They regenerated that area to what's now being seen as Media City. And that's where we're seeing the headquarters of the BBC, which have actually moved now from London. Microsoft, Booking.com, Google, Amazon have all migrated. Birmingham, Cameron touched on it earlier, the HS2. So the HS2 is a crossrail which will be going from from London to Birmingham within 55 minutes. That's slashing the travel time down from an hour and a half down to 55 minutes, which essentially is making Birmingham somewhat of a commuter city to London. And now what we're seeing kind of post-COVID is a lot more companies doing split working. And what I mean by that is you can have 2 days when you're in the office and the other 3 days you're working from home. So when we're looking at people that want to live, it's more attractive to live in these northern cities because your cost of living is cheaper, which therefore means you're seeing more disposable income. And as an investor, this is where we want to be parking our cash. You have a lower entry rate, with the average rate of the three cities we mentioned outside of London. Your entry rate is under £250,000. 25% of that, if we just do the maths, 25%, so 50%, 125k, we're looking at 75k. With all the trimmings involved, we can get a very, very good one bed between 80,000, 90,000 pounds. The universities, all of these cities have Russell Group universities. So top 10 universities ranked. And this is really important, because what that means is, I always say, happy tenant, happy landlord. We're not looking for university students, we're looking for graduates. What we saw over the last 20 or so years is students would go to these northern cities to study, but then have to come back to London for job roles, because there wasn't these levels of major corporations around. Birmingham has the likes of PwC, Deloitte, Tesco's, HSBC, so very, very big financial center. You're looking over in Liverpool. Liverpool actually has, or is, the startup capital of the UK, with loads of startups popping up. So these are the things when we look, and as Cameron said earlier, how we tailor investments towards our clients. We look at what you want to do, what you're trying to achieve over time. Is it short-term growth? Is it long-term growth? And this is how we recommend property.
Excellent. Right, moving forward. So what we'd like to show you is some UK hotspots recommended buy-to-let projects. Why Manchester? Manchester actually has been seeing extremely high rental yields. As we saw earlier, the Savills forecast is 29.9% for the next 5 years in growth, which means it's an excellent time to buy. You have two of the biggest football clubs worldwide. There is £1 billion expansion in the airport, as well as 5 universities and so much more going on in the city. I'd like to touch base actually on the high graduate retention, which means that people who are actually living and studying in the city end up staying there after and wanting to look for a job within the city, which means they're staying there. That currently sits at 43% of students, which is a huge amount. The city has 5 universities and around 120,000 students. There are large employer companies, the presence of the large employer companies being such as Google, Amazon, Microsoft, Booking.com, and other major corporations. Also, if you don't know, I'd like to tell you that the Chinese the Chinese actual government have invested into a £1 billion hub, which is due to be in Manchester as well. So a lot of key points, a lot of reasons why it's selling well. And I think genuinely, I will look back at this webinar in 5 or 10 years and look at these price points that we're showing you, because they will be non-existent. I think we're coming closer to Manchester and the north eventually going to be unaffordable. Whereas today, there are so many good payment plans, there's so many good options in the cities that we're selling investments for opportunists, and in the next generations, people will mainly look back and think, wow, how times have changed. Anything you'd like to add there, Steve?
No, I think you really covered it well, Cameron. It's what I would add is these cities that we speak about are what we saw London 20 years ago. My parents moved to London about 30 years ago, and the property prices that they saw then, you could probably pick up a property for under 100 grand. In the same area, like I said, I'm from an area called Battersea. My parents picked up their property for under £150,000. The same property is worth over 1.2 million now. And the reason why we are mentioning cities like your Manchester, your Birmingham, your London, also as well, I know I had a discussion with one of the attendees today about a city in the north called Leeds. Leeds is another city that is leading this and seeing great amount of growth. But what we want to do is we want to catch it now, as Cameron says, because if we catch it now, over the next 10 years, we're going to see similar growth to London, and that's where the real cash is going to be made.
Excellent. Stephen, I know you're very fond of this development, so I'll let you take it away.
Yes, I am. I am very, very fond of this development. So this is a development in the city centre of Manchester. So the city centre of Manchester is an area called Deansgate. It's gone through massive regeneration. A developer that has gone in, and so in the Middle East, and a lot of clients are from the Middle East. We travel all over the UAE, Qatar, Kuwait, etc. They are heavily investing in Manchester. We're seeing flights go from 1 or 2 flights a week to 3 a day. Reason being are developments like this, because development like this is 5 minutes from the city centre. Prices starting at £320,000. Like I said, that £320,000, we do not have to put the full amount in. We would only put in 25% of that property price. Of course, if you wanted to buy it cash and pay the full amount, you can, but that also can be leveraged as well. This is a development which is off plan. It completes Q2 2027. It's actually going to be a branded residence. What do I mean by that is it's got a hotel. So for the first 5 floors are going to be hotel, and the rest are going to be residences. It is a new thing coming to the UK, and we actually just saw a launch of the first branded residence, which is going to be the W Residences and W Hotel, and it's going to be the first, from my knowledge, 5 to 6 star hotel in Manchester. This development is great to get in because, first of all, we're very close to when it launched. It only launched a couple of months ago, so we can get in for base prices. But if you can see at the bottom here, it's the installment plans. So the reservation fee here is £5,000, but then the deposit, usually paid about 28 days after you've initially come in, is 10%. 10% minus the first 5% reservation fee you put in. Then 3 months after, you put in another 10%, which would be 20% in total. You pay nothing else until the property completes. So you can complete on cash, or you can complete via mortgage. I see at 80% on completion. What we need to do if you're buying with mortgage is top up that 5%, and we can mortgage the rest for 75%. It has great amenities, so coffee bar, residence lounge, co-working space, cinema, dining room, private dining, which you can hire, and a concierge service. I would say it's a high-story building, but it sits just perfectly located in terms of transportation in the city of Manchester, where you can get a tram straight into the city centre in under 3 minutes. You can also go to the major train station, which is Manchester Piccadilly, in under 10 minutes, and you're very close to Manchester University as well. If you're looking to purchase in Manchester, this is the development that I would definitely be putting forward. So definitely ask me some more questions about that. Cameron, would we like to move to the next slide?
Yeah, sure. Just a second.
So Manchester, and I think I've gone through this. I feel like I'm repeating myself. I should have actually moved the slide, but 20-minute walk to Old Trafford Stadium. You're 15 minutes by tram into Media City, that hub that I told you, where we're looking at all the major companies. This is really important when we're looking at where the tenants are going to be wanting to go to work. People don't want to travel massively to work. They want to live in the city centre, as Cameron said earlier, and this development provides that for you.
Yeah, I think you covered that well, actually, in regards to the location. Moving forward, so our next destination. I know, again, Stephen, I know you're an advocate of Birmingham as well. So I'll leave this part to you.
I do love Birmingham. Birmingham's a fantastic city. So Birmingham's officially the second city of the UK, and the reason for that is Birmingham is an old industrial city. Back in the day, there was an area on the west side of the city centre called the Jewellery Quarter, and it's aptly named because that's where they used to make jewellery. We're seeing the construction of HS2, which is High Speed Rail 2, which will be completed in 2030, reducing the travel time, actually underneath what I said, to 49 minutes, not 55. And that is going to make Birmingham a commuter city to London. We're seeing prices in the West Midlands as a whole, so Coventry, Wolverhampton, Birmingham, set to rise by 26.4% over the next 5 years, which is one of the highest rates on the Savills forecast. In terms of developments in the city, we're seeing massive regeneration on the east side of the city centre. It's what I spoke about earlier. Buy the rumour, sell the news. The west side of the city centre is massively or has been massively regenerated. We saw back in 2022 the Commonwealth Games were held in Birmingham, and because of that, the government put in massive regeneration where it was held in the west side of the city. But as an investor, my inside tip to you would be look for properties in the east side of the city, so an area called Digbeth. Birmingham, would you believe it or not, actually has the youngest average age of any city in the whole of Europe, with 40% of the population being under the age of 30 years old. And when I mentioned earlier, happy tenant, happy landlord, these are the young graduates coming out of university looking to live in the city centre in one of these new build apartments, which we absolutely specialise in. So I can't talk high enough about Birmingham. And especially if we look at kind of the growth scale, I would say Manchester is a bit further along. So if you're looking for something with maybe a tad more long-term growth and a lower entry point, Birmingham is definitely going to fit that. If we move on to the next slide, I already know what development this is going to be. This is going to be South Central, I'm sure. Yes, it is. And as it's aptly named, it's in the south side of the city centre. It's actually a completed development. We're seeing rental yields here on an average 5-6%. But the great thing about this development here is 30 stories. It's absolutely fantastic. It's majestic. It's got a rooftop garden area where you can go out, you can lounge. There's a very, very nice big screen. Essentially, it's an outdoor cinema at the top. You'll see again a gym room, community rooms, rooftop garden, sky cinema, 24-hour concierge here. But the fantastic thing about this specific development, it allows for serviced accommodation, so it allows for Airbnb. So where I mentioned the rental yield here currently being 5%, you could potentially see this jump up if you were to use serviced accommodation to double digits, so Airbnb. And if that's something that you're interested in, we can definitely talk to you more about that.
Great. Moving forward, I believe you've touched on the location already, so we'll just move forward from there, and brings us to our second to last project. I'll take this for us, Stephen. So Liverpool, again, as we've highlighted throughout the presentation, high rental yields, 5 to 7 per annum, whereas in London, of course, you're looking at 2 to 4. Property price growth in the northwest are set to rise. So Liverpool being at the same position as Manchester, expecting that 29.4%. And guys, I think the main thing is as well, we have to be understanding that these are conservative figures. When Savills or somebody from a large brand is giving you a figure, normally they are so accurate because they're conservative. So imagine actually what the actual figure will be in the next 5 years if Savills are forecasting 29.4%. High rental potential, many students, many people from Hong Kong, 70,000 plus current student population, and that's contributing to the long-term retention of young working professionals. Again, a high retention rate, which means people are studying and eventually loving the city that they're in so much so they do end up staying there. Another thing I'd say which really differentiates Liverpool from maybe the others is it's not as far as potentially the others are. They're expecting a 15 billion pound regeneration program. Multiple regeneration programs are underway across the city. Which brings us to our development in Liverpool. So we have a development in Liverpool right next to the city centre. And of course, as I mentioned, where would I invest? Somewhere which is waterfront in Liverpool. Starting prices range at £181,000, which is an excellent price point to buy in something today. There's huge room for growth and really realistic figures when it comes to the yield. I know many clients of ours are earning a lot more than a 5 to 6% yield. However, we like to give conservative figures. This development in particular has a Q2 2026 completion. Again, it goes back to the installment plans where you would only pay a £5,000 reservation fee, a 20% deposit on exchange, and 80% on completion. This is literally designed for long-term residents and short-term real estate investors. So an excellent project again. And if you are looking for more details, we will be taking some questions at the end, as well as feel free to reach out to us at any time. Again, location. So it's 1 minute walk to Brunswick Station, which is one of the central stations in Liverpool, a 10 to 12 minute train ride to Liverpool One Shopping District in Albert Dock and Tate Liverpool, and 20 minutes to the John Lennon Airport. Perfectly positioned. Right, and investments in London.
This is your city of expertise. You do a lot of business here, Cameron. So I'm going to let you take this one.
Sure. So London, again, we've both grown up there. Again, it's always going to be one of the largest cities recognized worldwide. You can go to pretty much any country in the world and say I'm from London, or have you heard of London? Everybody will know it because it's such a desirable place, I guess. It's one of the world's largest financial hubs with steady price growth and high rental demand. In this photo, we can see the lovely Canary Wharf. For those of you who have watched The Apprentice, it is a very similar photo. So lower rental yields, which is expected because the prices are obviously a lot higher. However, a population of 60 million plus with a shortfall of property, I think it speaks for itself, and it's why London obviously does so well. And if you want to jump into this development then, Stephen.
100%. So this is a development which is in the area of Twickenham. It's actually a royal borough. Fantastic development. So Twickenham is actually where, if you follow rugby at all, where England actually won the World Cup. And this development is recently launched. We're seeing prices, and I cannot believe I'm saying this, one bed starting from 450,000. Relative in London, this is a fantastic price. In terms of the completion, we're looking at Q4 26. Again, very high end in terms of amenity, 24-hour concierge, residence lounge, Wi-Fi, cycling, etc. But the good thing about a development like this in London, and I know we spoke about the negatives earlier with it being kind of lower rental rates, or that is it's relative. So you're looking at 3% rental returns. But if I'm investing in London, yes, you're going to get a decent rent because, of course, on average, just pound for pound pricing, the rents are higher in terms of figure. But London's going to do well in terms of growth. It's just the most stable place to park your cash because if I put something down in London, this for example, we're looking at 450 in the next 10 years. There's no reason that we're not seeing this in the 650, 700k range. And this is a story that if you speak to anyone that's invested in London, they'll be singing to the hills about. This is development, like I said, that is newly launched, and this is again what I hark back to about what I spoke about earlier. Buy the rumor, sell the news. If you can get a development at launch, it's the real benefit of buying something off plan, because buying at 450, developments which are completed right now, pricing around 550, 600k, you're potentially getting in very, very far below market value. And this what makes this development so attractive. It's a mix of 1, 2, and 3-bed townhouses. So again, if you're looking for an end user, somewhere to live that's just a bit outside of the city centre, but you can travel in. As we know, London's got absolutely fantastic transport links. This would be a great development for us to look at. And I'm guessing the next page is going to be something on location, is it? Yes, it is. It is on location. So 9-minute walk over to Twickenham train station, 20 minutes in to London Waterloo, and you're less than an hour by train into Heathrow Airport. So in terms of connectivity, it's absolutely fantastic. It's on the west side of the city centre, and in a great area that we can look for growth. Guys, as well, sorry, I should have mentioned this earlier. Please do, there should be a chat box here. If you've got any questions, please do pop your questions in as well.
Great. Moving forward. So expenses for the purchase and maintenance of an apartment. I think the key thing here is there is stamp duty, which pretty much is a tax associated with the government. It's typically around 4%. As we do know in the news, which I'm sure a lot of you have seen, it has gone up for buyers who purchase from April onwards to around the 7% mark. Legal fees, typically I'd say we range between 1,500 to 3,000 depending on the property price. A company looking for you to manage for management range from anywhere from 10 to 15%, 1.5 to £5 depending on where you are, again, for the service charge. Council tax, again, also depends on the council band. Every council has a different tax, and this typically normally would be liable in some cases for the tenant on a monthly basis. And ground rent, as we know, it's mainly been abolished for new builds and is at peppercorn, which is at the 0.01 of a penny. Otherwise, they range from, I'd say, from my experience, 250 to 600.
I've just seen a question put in there. So sorry, I'd just like to jump in and answer that question. The question is, how can you access this material? So we actually have a UK residential what can I call it? It's like a catalog. We can send that to you, and it gives you an overview of our whole residential property portfolio. But the best thing for us to do is after this is to have a one-to-one consultation. And the reason why I spoke about it earlier, property is very subjective, and what we want to do is tailor each of our investments towards your investment goals. So the best thing for us to do is let's talk about your specific situation, what you're trying to achieve, and I can send you these details and any more information that you want on a one-to-one consultation.
Great. So how to invest into the UK, payment plans, reservation process, and taxation. These are probably the most common questions we come amongst. So one thing I want to highlight, guys, is when you're speaking to a legal team, a lawyer, or somebody in particular who's essentially assisting you, typically if you booked a lawyer for 2 hours, you'd be looking at £500 upwards just to speak to them. Whereas the good news is we don't charge a fee for our clients, and we would literally sit down one-to-one, have a consultation with you. And again, even if it's not something you're looking at imminently, we're happy to move forward and help you in the long run and when you initially are ready. So typically, depending on the project, you would sign a reservation fee once you've chosen your selected property. It then goes into the legal department. So you would have a solicitor who would be representing you, as well as a solicitor who's representing the seller, in most cases, the developer, of course. After that, you would be drawn contracts. They would, of course, give you a welcome issue. You would be welcomed from our side and be introduced to our customer service department. And at the end of it, typically around 28 days later, after you are satisfied with the contracts, exchange the contracts, you would pay the final amount of whatever is agreed, in most cases around 25%, and legally you would complete the transaction. So it's fairly simple. And the main thing is we literally would hold your hand throughout the whole process. Anything you'd like to add, Steve?
No, I think you've really covered it well there, Cameron. I think this is more than anything. We'll go back to what we spoke about earlier, and apologies for repeating ourselves, but we just like to get this clear. We're a 360 service. There's never a time that you have a question that we can't answer. If it's something that, again, that we're not specialists in, for example, in taxes, etc., we'll put you into one of our partners who are mortgages, anywhere you are, the solicitors. Like Cameron said, we have a dedicated after sales team that work very closely with us. So any questions that you have, just be rest assured we'll be able to answer them, and we'll be able to hold your hand through this process.
Excellent. Right, so list of documents for KYC and AML. So you would need a passport copy. We would require a proof of address, which could be anything from a bank statement or a utility bill, and confirmation of source of funds. So that again relates back to the bank statement, and that's as simple as it is. We actually get a question asked a lot of some people thinking that there are some exemptions of the UK not accepting people, whereas the good news is the UK would accept pretty much any client from anywhere internationally. I think with the taxation, we won't more so jump into it so much, as the UK does legally require somebody looking for tax advice to speak to a tax advisor, and everybody's case is different. So if again, if there is particular questions, we're happy to answer them. Feel free to reach out. Otherwise, tax advice is more of a touchy subject, as it's so particular to somebody's case.
It's very, very personal, 100%.
Agreed. And finally, the capital gains tax. Again, more tax related questions. Again, please feel free to reach out to us via our website. Our personal details will be shared after the webinar, or of course, just let us know and we can answer these questions for you based on.
One thing I would like.
So, right. So again, thank you very much from our side, from the Intermark Global team. We're looking forward to welcoming and answering any questions that you may have. And of course, there's some contact details there below. We'd love to have anybody joining us, or anybody who's actually watched the webinar. Feel free to reach out, and we'd love to give you a consultation. Great.